Bill Williams' inventions have made an outstanding contribution to modern trading. And Williams is the creator of famous indicators such as Alligator, Fractals, and Awesome Oscillator, which he introduced in his book Trading Chaos. So many traders nowadays use Williams' inventions and trading system to trade in financial markets. Therefore, this video deals with a popular alligator indicator. It will help you analyze any market, identify the trend, and spot the entry points at the beginning of the trending market, giving an advantage over most traders. So first, let's start with some definition and a brief history. The Forex alligator of the Williams Alligator is a technical trend indicator that defines the market state and generates entry points at the beginning of the price momentum. As you know, the market can be either trending or consolidating. The price moves in momentum for about 30% of the entire time. It trades in correction or accumulation, therefore, for 70% of the time. And so the alligator can accurately identify the market situation. And another benefit of a Williams indicator is that it generates the entry points when the momentum is just emerging. So every trader wants to enter a trade at a good prices and, of course, exit at a peak of the trending price movement. So using the alligator, you will be able to pick up strong market moves and take profits at the end of the trend. However, the alligator alone is not enough to find out good entry points, and Bill Williams himself applied alligator together with the other technical indicators he developed. And so he developed the profit unity trading system based on the combination of the technical indicators created by himself, of course. So the trading system applies fractals and awesome oscillator as additional filters to define entry points. And so, as for other indicators not included in the profit unity system, traders use standard oscillators, RSI and stochastic as signal filters. So, what is the alligator? The Williams Alligator analyzes stock indexes, equities, commodity, precious metal markets, Forex, and even cryptocurrency market. It is a technical indicator based on the moving averages with simply different periods. Moving averages are the price derivatives. So if there is a price chart and you can attach moving average to the chart, such a market can be analyzed using the alligator. And the best time frames to trade with the alligator are daily, 4-hour, and 1 hour. It therefore makes no sense to use the alligator in shorter time frames, as there will be many false signals due to the price noise. We all know that. So for day trading, the H1 1-hour time frame will be quite suitable. And traders employ the Williams Alligator to open both medium-term and long-term positions in the daily or even weekly time frames, and the positions during the day or week in the shorter time frames. So now, how does it look in the chart? Well, it is a standard technical tool that comes with most trading platforms by default. You can find the alligator in the list of classic trend indicators of the MetaTrader terminal, as well in the, for example, personal profile of the LiteFinance brokerage company, naturally. So, and that is how the indicator looks on the price chart right here. To see the indicator in the chart, you need to first, of course, activate it. Click on the indicator button and select the alligator in the list. And now, if we talk about the key takeaways that we need to remember, then these are. The first one is that it is a trend indicator included in most trading platforms by default. Second, it identifies trends. Then it generates entry points at the beginning of the price trending movement. Next is that it indicates the end of the trend, and it works for any asset in any market. And the best timeframes to trend the alligator are D1, H4, and H1. Next is the point that it is composed of 3 smoothed moving averages with different periods. The MAs make up the alligator mouth. They are the lips, teeth, and jaw. It looks like a hunting alligator. It sleeps, eats, and then it rests. Okay, now we'll go back in time slightly and talk a bit about the history. So the Alligator Indicator was created by Bill Williams, an American trader and psychologist. Williams described the Alligator Indicator in his book Trading Chaos in 1995. The Alligator is an element of the profit unity trading system, which also includes the accelerator oscillator, awesome oscillator, fractals, gator oscillator, market facilitation index, and so on. And over many years, Bill Williams studied the US stock market and searched for regularities. As a result, he came to a conclusion that classical analysis, the support and resistance levels, trend lines, candlestick reversals, and continuation patterns do not work to predict the future performance of the market. Moreover, he believed that fundamental analysis is something like a crystal ball gazing. So, his research led the trader to the conclusion that the market is chaos and trading is a psychological game. Therefore, knowing the psychology and understanding the principles of behavior of market participants, the zones of accumulation and the moment of a price exit from the zones are simply crucial. So, for example, if you enter a trade before the price momentum starts and exit at the moments when the trend is being exhausted, big money is made easily and steadily, regardless of single losses. So the Alligator Indicator was invented to determine the state of the market by observing the market and accumulating knowledge about it. William came to the conclusion that the market's actions are very similar to the behavior of an alligator during the hunt. The alligator tracks its prey for a long time, observes and plans the attack, then it makes a sharp dash, grabs the victim, and begins eating. And when it is full, it hides and calms down, watching the new victim from the side. So likewise the market operates. The majority of trades see the trend exhaustion, the accumulation zone forms, and uncertainty arises. Next, as if out of nowhere, there appears a sharp price momentum which triggers the stops of the traders who have been holding trades in the opposite direction, trying to trade in the correction. And the individual traders betting against the big traders become prey, lose money, and leave the market. And when the market saturates, it calms down, and then the same begins, and so on in a circle. Other indicators included in the profit unity system serve to filter signals and to detail the entry and exit points in the overbought and oversold markets. Thus, Bill Williams developed an independent trading system and started to teach traders to use it. So his book Trading Chaos is still popular and has many followers, and the Williams indicators are still popular as well. Now going forward, we will discuss how to read the indicator. So, alligator is composed of 3 smoothed lines which Williams called lips, teeth, and jaws. These lines imitate the process of an alligator's hunting, and the lines are moving averages with different periods and shifts into the future. So let me explain how to trade with Bill Williams Alligator Indicator. Imagine how an alligator hunts. There are 2 stages of an alligator's behavior. In the first stage, the predator watches the prey as if it is sleeping. In the second stage, the alligator opens its mouth and grabs the victim and simply eats his food. The market functions in a similar way. 70% of the time it is trading flat or in the accumulation zone, and 30% of the time it is trending. So first you should define the market stage, whether it is sleeping or trending. So you open a new trade just before the alligator starts hunting and exit all trades before the market calms down. So the hunt begins from the moment when the alligator opens lips. The market starts to wake up, the green line begins to construct up or down, then the predator brings its teeth closer to the prey. The red line becomes active and begins to acquire a direction. Then the terrifying jaws open up. That means the blue line is lined up in the same direction with the rest. The alligator is ready to eat his prey, and now we need to spot a moment for the price to start to trade above or below the 3 lines of the indicator. In this case, you open buy or sell positions, so the exit signal appears when all three lines meet at one point or the trend direction is not clear, or when the lip line crosses the jaw line. This means that the market is full and will now sleep. We can say, quote, anticipation of a new prey, i.e. the new momentum. So let's discuss those three lines of the alligator indicator. So as we spoke previously, these are three moving averages which are called jaws, teeth and lips. Each of them has a different color and is responsible for a particular stage of the market development. Each has its weight and strength, of course. Green line indicates lips. It is the weakest level. However, it has the fastest reaction to the price changes. This moving average is the first to react to changes in balance of power of buyers and sellers in the market. And this line is used to add up to the open positions in the trend if there is the strong momentum in the chart. The lips line is the smoothed moving average, the SMA, with the default period of 5 moved by 4 bars into the future. So, red line is the teeth. The line is the average strength, support and resistance level. It serves to enter trades when the trend is not that strong. If the instrument is within the daily ATR, the teeth line can be excellent marker for entering trades in the trend. And the teeth line is the 8-period smoothed moving average that is moved 5 days into the future. And lastly, the blue line, the jaw, which is the strongest line, because the jaw line displays the border of the medium-term trend. If the price breaks this line, it usually means that that trend is turning in the opposite direction. It is used to spot entry points in slow trends or in conservative trading strategies when traders prefer to trade only in the strongest levels or zones. The jaw is the 13-period smoothed moving average that is shifted into the future by 8 bars. So I should note that the moving averages are applied to the median price, which is high plus low divided by 2. So not to the bar's opening or closing prices, you need to remember that. So to adapt the indicator to different time frames and markets, you should adjust the parameters, the periods and shifts of the moving averages. So you can also trade with the default parameters, but in this case you should trade in longer time frames from H4 to D1. Taking together the lines form a mouth of a hungry alligator ready to hunt for inexperienced traders and other market participants who trained against major players. Note that the first stage, the alligator sleeps, and the 3 smoothed moving averages are at the same point. Next, the lip line is the first to react as it is the fastest one. Next, the teeth line reacts and the jaw line is the last to react. It works in a similar way as an alligator opens the mouth to capture the prey. When the mouth opens, it signals that you should enter a trade. Thank you for watching for the part 1 of the mini-series about the alligator indicator. And so in the next episode we will discuss how to use the alligator indicator in practice and what signals it generates and how to use them on real examples. So thank you for watching part 1 and do check the second part.